Hello, my name's Charles Delastic. I'm the Managing Director of Bluebond Tax Planning. We've been inheritance tax specialists for more than 18 years and have helped hundreds of clients save millions of pounds on their inheritance tax planning. So today's video is around the subject of partnerships and family investment companies, and can you hold both of those at the same time? So today's question is around, can you have a partnership, which we normally set as limited liability partnerships, and a family investment company at the same time? Well, the short answer is yes, but let's go into why. So family investment companies and legal partnerships and limited liability partnerships, I beg your pardon, are effectively separate legal entities for tax purposes. So they're both taxed separately and individually. Now, generally, the requirement for a limited liability partnership only exists for landlords who are trying to move properties personally and want to move them into a family investment company, but they don't want to pay stamp duty or capital gains tax on the transfer. So the limited liability partnership is there to help them in that regard. However, sometimes property landlords do need income from their property portfolios, in which case it's actually more tax effective for it to come out of a partnership than it is to come out of a family investment company. Because if you think about it, if you're a basic rate taxpayer, then you'd be paying 20% tax on partnership income, whereas if it's in a company, you'll be paying 20% corporation tax, and then to extract the money out of the company, unless you set up directors' loans or something, will then enable the cost of dividend tax, which would be 8.75 or whatever the tax rate is at the time. Therefore, retaining some properties in a partnership has, of course, the benefit of reducing the tax, but it has the negative impact of the assets still being in the estate as far as IST is concerned. So it's a balance between what you need for income and income tax purposes and the IST issue. The reason that it's still in your estate is that obviously if it's in a partnership, it cannot be given away. You still own the asset and therefore it's still liable to inheritance tax. Whereas within a family investment company, it is possible to give the shares of the family investment company away. We're watching out for the capital gains tax issues, of course, using employee benefit trusts and things like that. But the shares can be given away and the income stream can still continue to come. So it's a toss-up for the landlord as to which way they do it. They could do both at the same time, or you could continue to own property in the partnership until such time as one partner dies and then transfer it into a company at a later stage. Okay, but the short answer is yes, a limited liability partnership and a family investment company can be held at the same time, and sometimes it's very beneficial to do exactly that. Hopefully you found this video useful. If you did, give us a like. Thanks for watching and bye for now. Bye.